Welcome to Speaking Business Central. Business Central is designed from a financial perspective with a great deal of flexibility in the setups. It also allows for a great deal of auditability. So when you're tracing through transactions, historical transactions, you can see how did certain activities occur. Along with all of this power comes a great deal of responsibility in setting up the system to ensure that the system will be set up properly in order to allow you to take advantages of all of these features. To that end, back in 2023, I created this article, The 10 Best Practices for Financial Setups in Microsoft Dynamics 365 Business Central. Today, what we're going to be doing is walking through these 10 best practices, sharing a few examples and demonstrating a few of the features and functionality as we go through the article. Okay, so let's kick it right off with number one on the list is when setting up your chart of accounts, there's a field called account type. And what these are used is to set up what we call totaling accounts within your chart of accounts that are useful for two purposes. One is to visually make your chart of accounts more appealing with bolded headings and indented posting accounts. The other thing is it's useful in financial reporting, whether that's a trial balance report or it's your financial statements. So what we want to do just real quickly, if I go into Business Central, let's just open up the chart of accounts and show what I'm talking about here. If I go to my in my chart of accounts here, you can see that I've got some bolded accounts here, the system indents here, and then I've got some actual accounts. If I scroll over a little bit, or maybe I can shrink this a little bit here, you can see there is a field called account type. There's different account types. Headings are just that. It's just a heading. A begin total works in conjunction with an end total. And wherever you see a begin total and then an end total, you'll see a totaling value here. This range is not something that you need to fill in manually. Instead, you import your chart of accounts or you manually enter your chart of accounts. You insert, make sure you need to have a matching begin total and end total for each of those. And then what you do is you run this process here, indent chart of accounts. And when this runs, as long as it tells you what it's going to do here, and as long as you have a matching end total and begin total, it updates and populates the totaling values here. Okay, so first thing is it's a nice feature. Again, it makes it more visual appealing and you can use for reporting. As an example, let's just say I go to my trial balance report. If I run my trial balance report, I'm going to run it for actual changes and actual balances. What I can do is down here, I can actually filter. So if I don't want to see the headings and the begin totals and end totals, I just want a simple trial balance with only my posting accounts. You have this account type filter here where I could choose. Maybe I only want end totals. I kind of want a summary report. In this case, let's just run it for posting accounts. I'll preview the report. And there you go. You can see that it's a nice clean list. So by having those totaling accounts in there, it doesn't mean that you cannot still produce a simple trial balance report. Same thing on the financial reports. If I go into my financial reporting here, if I wanted to create, I have a detailed balance sheet here. Let's just open up this one. And you can kind of see here that I've got my headings and my subtotals in here. When I go into my row definitions, this is where you actually build the rows of your financial statements. What I can do here is I could just simply choose to delete the totaling accounts out of here if I don't want them. And when I create it, I can choose if I'm building a new income statement, a new balance sheet. When I run insert GL accounts here to pull in my different GL accounts, what I can do is I can filter to say only show me my posting accounts. I don't want any of those other ones in here. Now I can highlight all those accounts, click OK, and pull those in. So use those totaling accounts. Let's move it along. Number 2, use dimensions for segmented financial reporting. This is so pretty simple concept. I'm not going to go into the whole setup of dimensions in here. You can see in a demo environment, common dimension codes are things like department, cost center, facility or site. It could be a branch or a region or area. It could be a customer class, a product class. These are things that you want, ways that you want to be able to slice and dice your financial statements using these different dimensions. From a chart of accounts perspective, what you want to think about is basically you want your chart of accounts to be static. So if you, for example, every time you hire a new salesperson, you have to add some new GL accounts. Or every time you create a new product class or a new customer type, you have to create a whole new series of GL accounts. You're not properly utilizing dimensions. On an average year, maybe you should add 1 or 2 GL accounts. You realize that you don't have a charitable donations account in your chart of accounts. Your company has made a charitable donation, so you need to set up a new account. That's the type of things where you need to be adding accounts. If you're regularly adding GL accounts, then you're not properly utilizing dimensions. Okay. Conversely, you want to ensure that you're only using dimensions for financial reporting purposes. A common temptation is that when you are setting up items and vendors and customers, to utilize dimensions to, for example, categorize your items. What you want to think about is dimensions are specifically intended for financial reporting purposes. If you're not going to look at an income statement, a profit and loss statement, or an expense statement from a GL perspective, then you probably shouldn't be using dimensions. It creates a lot of entries, a lot of additional data and limitations that you may not want to use. So I would say, for example, if you're trying to categorize your items, if you want to look at it from a financial perspective, great, use a dimension. If not, use an item category code or an inventory posting group, for example, instead. Right. Number 4, set up GL account subcategories. So this is a feature that came out several years back, the idea of a GL account category and subcategory. Let's go back. Let's go into Business Central here, and let's pull up our chart of accounts and look at that. So let's look at our operating bank account here. And what you'll see here, right on the General tab of the GL account card, you have your item category code and subcategory. The account categories, these are fixed values. You cannot change these values. You see that by this little drop-down menu here that you have. These again can't be fixed. They're there. The subcategories are completely up to you to define. A lot of times, companies will start off with using the Cronus demo data here, where you have a lot of noise. My suggestion is clear out all of the subcategories and then create new subcategories based on how you want your accounts assigned and how you want to run financial reports. So, for example, here under current assets, I have 4 subcategories: cash, accounts receivable, prepaid expense, and inventory. Now, what you do is from here, after you've assigned, you set up your subcategories, you assign your subcategories to all your GL accounts, and then what you do is you come here and you say, generate financial reports. And what this will do is automatically build a full set of financial reports based on these subcategories. And if I go into my financial reporting here, you'll see this series of financial reports that begin with an M. These are the automated setup ones. So let's look at that balance sheet here. And what you'll notice is I've got cash, accounts receivable, prepaid expenses, and inventory. These are my subcategories. So I didn't have to do anything to set this up. All I had to do is create a new account, assign it to the right subcategory, and automatically my financial statements are built for me. So it's a nice tool. Go ahead and set up and use those subcategories. The good news is you can do that at any time. Number 5, minimize the number of posting groups. So the system uses what we call posting groups to indirectly record transactions from a sales invoice or a purchase invoice to write GL entries. I say indirectly because when you set up a vendor or you set up a customer or an item, you're not directly assigning a GL account to that customer or that vendor. Instead, you assign a posting group to the vendor, and then the posting group assigned to the vendor is used to determine what AP or payables account gets hit when you post transactions for that vendor. Again, the temptation here is to utilize, to set up a whole bunch of posting groups, and then use those for a reporting perspective. It's possible. It's not going to hurt anything. It will create a lot of noise, and it will make it more difficult to potentially reconcile things at the end of the period, especially if you have a series of different GL accounts being used. Ideally, we want to minimize the amounts of changes. Auditors like fewer changes to the posting groups over time. It just makes the system more solid. Okay. Number 6, utilize the direct posting field on GL accounts. This is one of my biggest things I usually harp on is when and this works in conjunction with the last one, posting groups. So for example, let's go look at our vendor posting group. Right. So if I go look at vendor posting groups in here, you can see I've got a whole bunch of different vendor posting groups. These are assigned to each vendor. And then I've got my accounts payable account, right? So for suppliers here, 20100 is my payables account that gets hit. So what we want to do is we want to make sure that users cannot directly post entries to this account because we're using it in a posting group. So as a general rule, we want to eliminate the ability for users to directly post GL entries to any account used within a posting group. So let's go back into our chart of accounts and let's see if we've got that set up right here. So here's my accounts payable account, and direct posting is turned off. So so just as an example, if I were to go create a new purchase invoice, let's say I'm a new user, you just hired me, I'm creating a new invoice for a vendor. It comes in and I say, oh, I need to hit accounts payable for this, right? Because I don't know don't know any better. If I go here and I say, let's try to hit this accounts payable account, what happens is I get an error. It says direct posting must be equal to yes in GL account 20100. Current value is no. So this is what happens when you turn off direct posting. It's on a purchase invoice, general ledger entries, any direct method of users posting entries to the GL account. So what this does is it ensures that the only thing that's hitting that GL account is that posting group setup there. Okay. Moving along, number 7, use each GL account for a single purpose in posting groups. This is probably the number one thing that you can do to make your life easy when it comes to auditing your transactions and reconciling your financials at the end of each month. So a very common example is inventory. So when you set up inventory, there's what's called expected cost posting. And a lot of people will go into their inventory setup. And so let's go into inventory posting groups here. And what a lot of people will want to do when they go into the setup here is they say, well, I don't really care to differentiate between inventory, which means the invoice has been posted, or inventory interim, which is the account that gets hit once it's received. So what they say is, you know what, I don't need an extra account for that. Let me just set the inventory and the inventory interim account to the same account. It'll make my life easy. Everything will just flow through this one account. The issue with that is that if there ever comes a time where your inventory is not reconciled, your GL account value doesn't match your inventory valuation report, then if you're using the same account and for both of these, both the inventory and inventory interim, it becomes very difficult, almost impossible to be able to reconcile those accounts. So the best practice here is for each column in a posting setup, utilize a unique GL account. The benefit is at the end of the day, if there's any issues with an account and you need to trace what hit this account, if you're only using each account for one purpose and you've turned off direct posting, then you know exactly what activity is hitting that individual GL account. Let's go back to our accounts payable account and just look at that. So we've got direct posting turned off. And if I want to see which columns on my posting groups is this account used in, I go up to my account tab here, and that's this where used list. This shows me every single posting group where this GL account is used. And this looks really good here. You can see that it's only set up as my payables account. If I would see it set up here as my payables account and my purchases account, that would be a problem, right? So just keep it clean. And I always tell people, adding a new GL account costs you $0. So, although again, you don't want to be creating GL accounts willy-nilly, for this purpose, for auditability and reconciling your financial statements, one GL account per use within a posting group is the way to go. All right, number 8 gets into bank accounts. So the suggestion here is do not link multiple bank accounts to a single account. A lot of times what will happen is people will say, well, on my chart of accounts, I've got just this operating account, but I really have 2 operating accounts that I use. So if I go under bank accounts, for example, here's an example. Let's see, I'm actually pretty good here. I have a one-to-one relationship. So again, this uses posting groups to link the GL account to the bank account. And what we're looking for here is a one-to-one relationship. We want to have one GL account for each bank account. And therefore, we're going to have one bank account posting group for each one of those. So it's actually a one-to-one-to-one. One GL account, one bank account, one posting group. And each one is linked together. The reason for this is that when you're using the Business Central bank reconciliation feature, the system is going to attempt to match the balance in the bank to the balance in the GL. So you want to have a one-to-one relationship there, assuming you are going to be using the bank rec built into Business Central. 2 more to go. Number 9, this is really relevant only for those who are using the manufacturing module within Business Central. And the suggestion here is you'll see we have under the inventory posting setup here, you can see that for different locations and different inventory posting groups, you have the ability to set up a unique work in process or WIP account. Well, in short, you really only want to utilize one WIP account for your company. And the reason is because when you're consuming raw materials, the system is going to use the WIP account associated with the raw material item. So it's going to debit WIP and credit inventory as you consume items into that production order. When you post output against that same production order, it's going to use the WIP account on the finished good item to credit WIP. Again, debit inventory, credit WIP. If you're using 2 different WIP accounts for your raw materials and your finished goods, those balances are never going to clear out. And you're not going to have a clean way to fully reconcile one GL account to your WIP balance using your manufacturing production WIP report. So try to stick to one WIP account. And then lastly, but not leastly, is from a long-term perspective, oftentimes, you do not want to delete GL accounts. The reason is because, so what is the rule? So can you delete a GL account? The first thing is yes. As long as, if you have a GL account and you have no transactions in an open fiscal year for that account, the system will let you delete that GL account. Obviously, if it's an active account, it's the current year, you've got active transactions in there, it's not going to let you delete it. But if you don't have any active transactions in an open year, it will let you delete that account. Don't do it. The reason is because you almost certainly are going to want to go back and run a balance sheet or an income statement or a trial balance report for 2 years, 3 years, 4 years ago. If in a lot of those reports, like the trial balance report, starts by looking at the chart of accounts to pull in the GL balances. Well, if that GL account doesn't exist, the report's not going to include those balances. So keep those accounts there. When you go in, if you don't want to use a GL account anymore, the easiest thing you can do is you can just block the account. So there's this blocked field here. This prevents the GL account from being used. The second thing you can do is you could edit the name, something like "do not use" or something like that, so people don't try to use it if they're looking it up as they're entering a transaction. The third thing you can do, you actually can renumber the GL account. Maybe put a Z or an X in front of this account, and what it will do is it will sort that account to the bottom of your chart of accounts. To kind of clear it out of the way so it's not sitting there enticing someone to try to use it on a regular basis. And when you do a renumbering of a GL account, the system will go through the entire database and update every reference to that GL account number to renumber it to, for example, X10100. It will take a little while depending on the size of your database. So if you are going to be renumbering GL accounts, just make sure you're not doing it at a peak usage time in the system. Also note that the very first GL account that you update or rename will take significantly longer than the second, third, and fourth, the subsequent GL accounts that you renumber. The reason is kind of putting all of that information into cache, so it's making the second and the third and the fourth ones much easier to do. So. Thanks for joining us today. Hopefully this was helpful in understanding some of the best practices that you can do to make sure that Business Central is set up accurately. It eliminates opportunities for errors from users. Also gives you the full auditability and control that you need to make sure that when you get to the end of a month, everything's reconciled, or at least it's fully reconcilable from there. Thank you very much.